which is India's largest live digital CME platform, running 20,000 plus CME connects per month. A warm welcome to the event of Budget 2022 and what it means to manage your wealth. The session covers important pointers from 2022 financial budget and its impact on the healthcare industries and doctors. This event is a personal growth series for doctors, and we are thrilled to have with us today our guest of honor, Mr. Girish Vanvari, and our host, Mr. Mukul Nag, for the event. I'm glad to introduce Mr. Girish Vanvari, who is the founder of Transaction Square, a tax regulatory and business advisory firm. He has done fellowship of the Institute of Chartered Accountants of India. Prior to his entrepreneurial venture, Mr. Girish had a 13-year stint with KPMG, wherein he was the national leader for the tax at KPMG India. Prior to KPMG, Mr. Girish was at Arthur Andersen for over a decade. Some notable expertise of him in recent deals in the pharmaceutical industries are Suburban Diagnostic Acquisition by Dr. Lal Path Labs, structuring options for Metropolis Healthcare, Pharma Consortium Arogya Bharat, Consolidated Digital, acquisition of Pharmarack and AIOCD, AWACS, Solara Active Pharma, amalgamation with Aurora Life Sciences, Sasta Sundar Marketplace acquisition by Flipkart, Aurobindo Pharma Group restructuring, Dr. Reddy's Lab Group restructuring, Cipla Group restructuring. A grand welcome to Mr. Vanvari. Now, I would like to introduce our host of the event, Mr. Mukul Nag. Mr. Mukul Nag is a director of Clirnet and CEO at Velox Advisory. With over 2 decades of experience in investment banking, private equity, and public markets, he has been managing director and investment committee member at Standard Chartered Private Equity. He has completed private equity cycle experience across investing, growth-focused investing, management, and investment exits. He works and sits with the board of number of startups in areas such as healthcare, education, and media. Now, without any further delay, I would like to hand over the event to our host, Mr. Mukul Nag, and request to welcome the guest and tell us something about the event. Over to you, sir.
Thanks very much, Preeti, and again, a very warm welcome to all the participants who've joined us, and a special thanks to Girish Vanvari, who's joined us here today. Let me just share that, given his background and knowing his work personally, I can tell you that he is the ideal person to talk about Budget 2022, and also very critically, what it means to manage your wealth as a doctor. So without a lot more background, Budget 22 has been termed by a few as a public-private partnership budget for its thrust on infrastructure, capital expenditure, and growth using government spending as an enabler. The budget has focused on giving tools for increasing investment, jobs, and income. A 25% rise in capital expenditure for FY23 has been further enhanced by PM Gati Shakti. There is also a lot of emphasis on new age areas like climate control and digital infrastructure. Even productivity-linked incentives, or PLI, as we often read in the newspaper, continues to be used to build on Atmanirbhar Bharat and creation of jobs. And of course, the increased outlay on the National Digital Health Mission will ease operations of health service providers, even as we await a lot more details around it. The grouse against the budget, of course, has been that it has maybe not maintained some of the poor-related schemes, and that it does nothing for the middle class in the form of tax benefits. But really, this is just a big picture. The right person to talk to you about this, and I'm sure he has a lot of insights to share for each of our participants, is Mr. Girish Vanvari. So over to you, Girish, and look forward to what you have to share with the doctors on the platform.
Thanks, Mukul. Good morning, all. I have a presentation which I will run, which essentially will summarize the thoughts around the budget. Is the screen visible?
Yes.
Thank you. Just to lay the background, what was the backdrop? What is happening around us? To understand the budget, it's important to understand what's happening around us. Clearly, the global economy is on a rebound. The US growth rates is highest. Europe is growing. India is growing. Everything is on a big momentum rebound. In India, we had 40 plus unicorns this year, and over 1 lakh crore was invested in unicorns. So the startup ecosystem is really growing, and we have lots of good concepts coming. And if you look at pharma itself, Pharma Easy, you look at Sasta Sundar, Dawa Dost, doctors also, M-Fine, MediBuddy, so many different kinds of concepts getting funded. However, the concern is rising oil prices, rising commodity prices, and hopefully a taper to control this, whether we have 4 price interest hikes or whether we'll have 5, whether it'll be 100 basis points, 200 basis points. That's the uncertainty which is spooking the market. There are COVID impacted sectors. We are all not in the same boat. We are in the COVID storm. Some sectors are doing very well, like IT, pharma. Some sectors are really impacted: aviation, hospitality, real estate. Real estate is now coming back. Retail is in deep trouble. Malls, retail, so on and so forth. There was upcoming state elections. That was the backdrop. Will there be populist measures to please the vote banks? There's a warfare. Ukraine-Russia crisis goes up and down. Whether Europe will support Ukraine, whether US will support Ukraine, whether Russia will attack Ukraine, so on and so forth. That also creates uncertainty. Government wants to reform, but yes, the farm reforms was not a great thing from a reform direction perspective. But Air India divestment is completed, so that's a very, very big thing for the nation. LIC IPO is pending. So government wants to reform, and government wants to go ahead and make the country, build the country for the future. So clearly, that was the backdrop. Roaring global economy, roaring fears of inflation, and need to also balance some sectors which got really impacted. With this backdrop, everybody was expecting the budget to change the whole world. And I don't know how budget can change the whole world, but everybody had every expectation. And I could actually read all sections of the Income Tax Act wanting a change in the pre-budget memorandums. I've just summarized the popular expectations. People were expecting higher deductions. Individuals were wanting the slabs to go up. Individuals were wanting standard deduction to go up. They were looking at different kinds of concessions in terms of interest deduction for housing loans, more concessions for investments, ATC deductions, more deductions for COVID, so on and so forth. So the wish list of individuals was very high. And that's what Mukul said, the middle class is disappointed. There was a fear spooking the market. Will capital gains tax come at a higher rate? Will inheritance tax come back? Will wealth tax come? That all did not happen. So that cheered the market up totally. Uncertainty on these points went away. Taxability of stock options, that was a big ask because they want the point of taxation to be the sale, not the exercise of the options. This was a big ask of the startup ecosystem, which wanted the taxation to be deferred to sale and not exercise. Corporates wanted more incentives. They all realized that the rates are competitive. There's no more scope for the rates to go down, but they wanted more incentives to go through the China plus strategy, which is India can become more relevant for exports. So PLI, R&D, export incentives, so on and so forth. There was a need for cross-border mergers, overseas listing, which is not permissible now. Intent is clear, but no, there was expectations some direction would come out. Increase in LRS limits for people wanting to buy assets overseas, and legislation and taxation of cryptos. That was a popular expectation as we went into the budget. What did the budget deliver? And I will capture things. I had a doctor in my mind. I had a medical professional in my mind as I made this presentation. I realigned this presentation to what I would like to know if I was a doctor. And being a tax advisor, I also work with some doctors actually. So I put down what I thought a doctor would be interested. There is no change in individual rates. There are no concessions. There is no more taxes. There is no less taxes. So all your tax systems remain the same. Long-term capital gains tax surcharge has been capped at 15%, which means what? If you were selling a house, today you're liable to a tax rate of 28.5%. That tax rate has gone down to 23.92%. So if you were selling unlisted stocks or selling houses, then effective April 1, 2022, your tax rates go down by 4.5%, from 20.5 to 24 approximately. So all of you who are wanting to sell a house now, wait for 2 months, do it after April. If you do it after April, then you will save 4.5% tax if you're having long-term gains. If you're looking at selling listed, unlisted shares, clearly wait for some time, wait for a couple of months. If listed shares, no problem at all. 12% is the rate, 12% will be the rate in the future. So one important change, this is what has happened. For COVID-related relief, so people who were getting COVID expenses reimbursed from friends, from employees, from employers, from different kinds of people for themselves and their relatives, it's not taxable in their hands. The act is very clear now. If you got an ex gratia because if somebody has passed away in your family because of COVID, then the ex gratia up to 10 lakhs from non-employer is also exempt. From an employer, there is no limit, the whole thing is exempt. So ex gratia, as well as COVID expenses, the law is very clear now on the concessions which it offers. There is an extension of tax holidays. The manufacturing exemption has got extended by a year. So under the law, any entity which is set up to 2023 is entitled to a tax holiday of 15%. If you are a new company, new manufacturing, enhancing your production, your manufacturing, then a 15% tax concession is available if you start your manufacturing activities by March 2023. This has got extended by a year to March 2024. Startup concessions, startups enjoy a holiday of 3 years in a block of 10 years. And this is provided the startup starts operations up to March 31, 2022. This has also got extended by a year to March 2023. So there is a bit of extensions in tax holidays for manufacturing companies and startups. Individuals only need to watch for this 15% surcharge cap, which can lead to some benefit to them. There is no deduction for cess and surcharge. So previously companies used to try and claim cess and surcharge as a deductible expenditure for their taxation purposes. Now there is no deduction for cess and surcharge. The law is very clear, and this is a retrospective amendment. It goes back to April 1, 2005, which says that, if you were taking a deduction for cess and surcharge, then from April 1, 2005, the whole computation needs to be reworked subject to limitation provisions, and this can lead to a huge tax burden in the hands of the companies. Foreign dividend, which was hitherto taxed at the rate of 15%. So if an Indian company receives dividends from a foreign company, if it has 26% or more stake in the foreign company, the dividends are taxed at a concessional rate of 15%. That concessional rate has gone away. Now it's going to be normally taxed at the rate of 25%. This is also effective April 1, 2022. So if you have any foreign dividends, get it back into the country before April 1, 2022 if you want to get the money back into India anyway. The most important deduction gone away for the doctors is the next one. Essentially, what happens is there are a lot of laws which permit some kind of expenses. It's considered to be illegal, considered to be prohibited, considered to be an offense under law. So for a medical fraternity to give a gift to the doctor is not permissible under the law. And a lot of companies were actually doing overseas trips or overseas seminars, taking their doctors and their wives overseas. Now the law is clear that such expenditure, which hitherto is not permissible under law, will not be tax deductible. So this is a big blow to the pharma company. And if you read it along with the next one says that if you get any benefit or perquisite from business or profession, then you have to withhold TDS. So like, let's say a doctor goes on a trip or foreign trip with a pharma company, then his foreign trip, is it a benefit or not? Is it a perquisite or not? Is a big question mark. And that's another dilemma which a company will face, that if it's a benefit or if it's a concession, then the company who's taking the doctor on a trip also has to withhold 10% tax on the benefit which is given. So the last 2 points are an irritant for the medical fraternity, especially doctors, and you have to be very careful. And suppose if a 10% withholding is done, which means that the tracking will happen and it will be income in your hands. And if it's income in your hands, you would have gone for a trip, but the cost of the trip will be liable to a 35 to 43% tax rate in your hands, depending on which tax bracket you fall under. So Mukul, according to me, these two are the most important change, and both go together. It's not, like non-deduction, you would say, how do I care the doctor? The company pays more taxes, it doesn't matter to me. But withholding of tax, it directly comes in my return of income, and I can't ignore it. It's important to me, it matters to me.
This withholding of tax, Girish, would be reflected against the PAN card or basically of the doctor, say in this example?
Absolutely, each individual doctor.
Right. That's a very interesting point. I don't think that's really something which has been focused on in at least what a lot of stuff that I have read.
Yeah. So this is a way you read the two. It's irritant for the doctor, very big irritant, and for the pharma companies. There is a TDS on immovable properties, so people who are buying properties have to withhold 1% as a TDS. This TDS is on the market value or the stamp duty value, whichever is higher. The next point is also very, very important. There is an opportunity to come clean for undisclosed income. If you've forgotten to disclose something in the past, if you've not reported some income in the past, if you have some income which you have inadvertently left out, then you can go ahead and revise your return for the next 2 years after your assessment year. There is a penal tax to be paid in this kind of a situation. The penal tax is if you revise it within 1 year of the assessment year, it's 25%, and it's 50% if it's revised after 2 years, within 2 years. So 0 to 1 is 25, 1 to 2 is 50. So this is like a VDIS. So if you have some transactions in the past which is not taken care of, it's an opportunity to come out clean and get it sorted. A lot of people I know were doing bonus stripping because all the wealth advisors would come and say, do bonus stripping in this good stock which has come. Now bonus stripping in shares. Previously bonus stripping in units and mutual funds were not permissible. Now bonus stripping is not permissible in shares, in WIT and in REITs, all of them. So bonus stripping is gone effective April 1, 2022. Whatever bonus stripping has to be done before April 1, 2022. After this, no more permissible.
How would this be, brought into effect, Girish, in the sense that, can someone still go ahead and do this and get, but be found working against what is allowed in law?
Yeah, absolutely. If you did bonus stripping, the law has a limitation that if you have bought shares 3 months before a bonus announcement and sold it before 9 months after the bonus announcement, then clearly in this period, the loss is not allowable. So when you're claiming a loss against a share, they will test it for bonus stripping to see whether it's covered under the limitation period of bonus stripping or not. And if it's covered under the limitation of bonus stripping, it won't be allowed to you. So the bonus stripping is gone away. The next point also is a very, very important point. And benefits received from a trustee of a trust liable to penalty. It's a very, very important point for hospitals. It's a very, very important point for charitable hospitals, which are claiming tax holidays, which are given their facilities to other companies as a franchise. So a lot of hospitals operate through a trust. And the amendment is that if you have a charitable trust operating a hospital, and if the trustee gets any benefit from that trust, any personal benefit from that trust, then he's liable to penalty of 100% of the benefit which he receives. So, a lot of people have catering, a lot of people have buses or ambulances which are debited as cost to the hospital. If arm's length is not demonstrated, and if you can't demonstrate the worthiness of that expense, then the trustee who is indirectly behind that benefit can be liable to a penalty. So money taking out from trusts where hospitals, and this is applicable to universities and colleges also, which are charitable purpose universities, colleges, and hospitals will get trapped.
So Girish, this would therefore cover medical institutions as well, presumably?
Absolutely, who are claiming tax holidays, which is charitable trust exemptions or cooperative society exemptions. This is a very big thing, Mukul, because I see a lot of hospitals, at least in this domain. According to me, the next amendment is the biggest change in the budget. And it says that if you receive a loan from somebody, suppose if I give Mukul a loan and Mukul takes a loan from me, Mukul has to ask me the source of the money from which I have given a loan to Mukul. If he can't explain that source to the tax office, the loan is considered to be his income. So it's a very vicious provision which says that if you take any loans, you have to really dig down to the source of the money from where that loan was given. Otherwise, the same can be treated as income. So all doctors giving loans, all doctors who are lending money to others as a part of earning income will need to give declarations to the people who are borrowing as to what are the various sources from which the loan is given. So Mukul, this is another anti-avoidance thing. And you can imagine the havoc this can create in the tax office, because they may never be satisfied with the information which you give, with the explanation which you give, and really put a penalty on unnecessarily. So it's treated to be income. So income tax is at the rate of, depending upon the corporate entity which you are, partnership firm 35, company 25, so on and so forth.
This is a big complication, leads to also a lot of interpretation issues.
Yes, yes.
Pointed out.
It's like the angel tax, Mukul, which you have in your startups. You saw the complications with the angel tax created, and that was for equity. Imagine this is for loans. So where can this be going? I mean, look at the complications this can create. Faceless assessments, litigation, and other changes which are standard, and there is an overall stable rate regime. Focus on ironing out gray areas. So wherever the law is ambiguous, like whether cess and surcharge is deductible or not, law is clear now. Whether breaking the law and taking doctors out and giving them a holiday, is that allowable? If it's not available under the law, then the tax reduction goes away. So there's a lot of cleaning up of gray areas which have happened in the budget. And crypto taxation has come in now. Any crypto taxation which is happening is liable to a tax of 30%, treated as speculative income, subject to withholding, so on and so forth. So if you look at how does it impact life science and healthcare sector? I mean, how does the budget impact the medical sector? First is this Ayushman Bharat digital mission. This is amazing. This links the whole setup. If it happens, the whole national digital health ecosystem will be interlinked. The information which this can give is awesome. There is a focus on mental health programs. So this is a great opportunity for doctors, because you will have mental health professionals, and many people are facing COVID, and many people are really disturbed with the COVID situation. So to make that treatment happen, this is a big initiative which has been launched. Pharma is considered to be a sunrise industry. So there are supportive policies, light touch policies, R&D focus, building on domestic capabilities. And if you look at the indirect tax concessions, X-ray machines, artificial kidney and disposable sterilized dialyzers. So there are concessions which want to move the exports up, wants to move the imports down and focus on domestic manufacturing. So for doctors, I see there's digital upskilling, there is mental health professionals, healthcare records, linking up, which can change the profession in the next few years. And now with the digital doctor also coming through, I see a lot of changes happening through the digital system, and which the budget is also enabling, recognizing that digitally the world will move in a different way as one goes ahead. There are tax concessions, which I, sorry.
Yeah, I was just sharing that, our own experience here in Clirnet is exactly that. And, frankly, all our doctors have taken to digital in a very big way, and it's become a core part of what they do. So the efforts of the government, particularly towards the national digital health ecosystem, is going to, align a lot with the changes which have already started happening on the ground.
What I see is being an advisor to traditional world and the digital world. I mean, our firm is 50% unicorns and 50% traditional companies. So being an advisor to both the worlds, what I see is as follows. You are a doctor, you are today online consulting because in COVID you've not met people, you're sitting on your laptop and giving advice. That's one part of it. Secondly, the digital move of digital doctors, which is like somebody in a remotest village in Gujarat who is very good can be your doctor way down in Chennai. And that's the competition which doctors have to recognize and gear themselves up to. So the people who are in faraway places who are very talented get an opportunity. So nothing can be taken for granted. Right now, they're just using digital as a medium as visit to a dispensary, but soon it's going to be a doctor anywhere from anywhere in the country, anywhere in the world who can be treating somebody. If you have a capability and if you really position yourself well, the competition can come from different sources. The whole digital mission says that. Coming back to life scale, so overall very positive, lots of stuff in the budget which makes it look very robust and looks quite good. As far as other industries is concerned, real estate, SEZ policy is going to be reworked, big opportunity for real estate. A long-term capital gains tax, I told you 20.5 going down to 24. Wait till April 1 till you sell your stuff. Digitization of land records. So we will have digital land record details like how we have it for DMAT of shares. So we'll have a statement of our properties in the next few years. There's speak about e-passports, drone as a service for agri-tech, digital rupee, digital banking, 75 digital banking units for digital banking, digital education, committee for P and VC startups. So all are futuristic and they're great initiatives. Like if you see the Arogya Setu apps and the way our vaccination has been captured, it's just amazing. It always works. I've not seen that, I've struggled to open it at an airport when I'm showing my vaccination certificate or moving around, demonstrating the status of my COVID. So it's just amazing the way the whole thing is linking up. It's just amazing. There's a 5G auction, which will make technology even more quick because 5G will be quicker than 4G. There is a broadband and mobile service optic fiber network in rural area, push for that. So that can also be, I was in a place called Jalna, which was yesterday for a client meeting. And there was not a minute my phones didn't work or there was no internet connectivity. Jalna is like a semi-village. In the sense it's away from Aurangabad, 45 kilometers, but everything works. And it will work more with this 5G and the various push to rural network. In the financial sector, crypto taxation, we spoke about digital rupee, digital banking. We have 1.5 lakh post office. Imagine they'll get connected to the banking system. What can that create, Mukul, in this country? If you have access to small savings of 1.5 lakh post offices, the money flow to the stock market, which we are talking today, is nothing, absolutely nothing. Gift city initiatives, there can be international arbitrations in gift cities, there can be so many different things which you can do in the gift city, which is expanded. As far as renewable is concerned, the EV charging infra, battery swapping technology, green bonds, lots of initiatives for renewables, big infra push for multi-nodal logistics park, 100 PM Gati Shakti cargo terminals, more commitment to national highways. So really, it's all laying a path for growth, all laying the infrastructure which will enable growth, and with a balance to social economy clauses, which is like There is more outlay for agriculture, various social economic programs, which is health, medical, so many different kinds of things, education, upliftment of the poor, so on and so forth, enhanced outlays for everything. That's why if you see the stock market, they gave it a big thumbs up. If you look at budget in a nutshell, there is growth focus, there is layoff infrastructure, more capital spending, more initiatives, more bolder things to make India real and looking forward with digital of many things. Minimal tax changes. So, whoever I meet is not worried about taxes. What he wants to know is the certainty of taxes. So he's not afraid to pay 20 or 30%. What he wants is 20 cannot become 40 and 40 cannot become 30 every year. So stable tax regime is what everybody wants and which is what is being given. That's where the market rose back up. A lot of policy initiatives for building the India for the next few years. Rationalization, clarification on open issues, so all controversial case laws getting ironed out, like the one hitting the medical fraternity in the big way. Indicates stability in policy making, and clearly we'll have to see the results as one goes forward, seeing whatever it is. So with this, I have finished my budget thing, but we can pause here and take questions on the budgets, and then I will come to how should a doctor look at his wealth.
My suggestion, Girish, is why don't you just continue forward, and then we will come back to the questions on a more comprehensive basis.
Sure.
So let's go right ahead.
So what I will now discuss is my interactions with doctors. I interact with the best doctors in this country, really some very big ones. And the biggest thing which a doctor faces is that, should I own my assets in my own name? Should I own it through a company? Should I own it through a firm or LLP, or should I set up a trust? These are 4 things which a doctor normally asks. If you own things in your own name, maximum tax 43%. Inheritance tax is payable when you transition it, if inheritance tax comes. Ring fence against liability is not possible. Suppose if you're hit with a personal claim on you, then the liability cannot be ring fenced. And clearly, segregation of ownership and management does not happen because you're owning everything. Should something go wrong in your hospital, should something go wrong, a patient sues you, then the whole asset base of yours is at stake. So it's efficient, but it has its liability risk and the maximum taxation. Second thing is, some people hold it through a company. Company has a lower taxation rate of 25%, but upstreaming it from the company as a dividend rate. There is inheritance tax when you transition the company. It doesn't ring fence you against personal liabilities because the shares which you own in the company is always liable for any third party claim. And that's a similar thing for firm and LLP. In the firm and LLP, the tax rate is not 25 but 34. But again, inheritance tax, there is no savings in the future, and ring fencing doesn't happen. Should something go wrong, it can be taken away from your firm's ownership. Trust is a mechanism which...
Girish, can I just request you to explain LLP for people? This is the full form. And
LLP is a limited liability partnership. So many people form a partnership firm. So you and your wife or your children can form a partnership firm. You contribute your money to the partnership firm. The partnership firm onward makes investments. If you are making investments from your own hand, the rate is 43%. If you make investments through a partnership firm, the rate drops down to 34%, 35%. So actually you save around 8% of taxes. And the partnership firm also is your vehicle to make consolidated investments. Like Mukul mentioned, when he's making startup investments or when he's on the board of startups and startups are raising money, they make you sign SSA, SHAs, agreements and documents. All that, rather than you signing directly, you can sign it through the firm and you're protected personally. Should something go wrong, what is there in the firm cannot be touched, but your partnership firm interests can be touched. So to that extent, you are liable for anything which can go wrong, but at least not at the partnership firm level, only at your interest at the firm level. Trust, I will just come to. So typically a trust happens as follows. You settle a trust. The beneficiary of the trust can be you, your wife, your relatives, your children, and the trust you contribute profits. Your assets to can be properties, can be shares, can be cash. And clearly the trust ring fences you from any third party liability. When you contribute something to a trust, nobody can take anything away from that. So if you have any claims or anything in the future, the trust is ring fenced from all such claims. The other advantage of the trust is if inheritance tax comes in, then the trust perhaps is exempt from inheritance tax. The third advantage is that should you also need to send your children overseas for studies, because many doctors send their children overseas for further studies. And if something happens whilst they are overseas, suppose they inherit something, somebody dies in the family, then the trust ring fences any inheritance tax which otherwise would have been paid in jurisdictions like US, UK. Overseas jurisdictions have inheritance tax. So if somebody dies whilst they're studying overseas, if their parents die or an inheritance happens because somebody has died in India and they get something while they are overseas, then that ring fencing for inheritance tax is very, very important. So what I see many doctors now doing is direct owning versus partnership firm versus trust. I see people looking at all three options, some direct, some through a partnership firm, some through a trust. Company nobody does because of 2 layers of taxation. Moving forward, a lot of people come to me for making wills. So should a doctor make a will? Absolutely yes. Nobody is immortal. We should all make a will. A will is made by a person which says that after him, his wealth will be divided in the manner of his wishes. If a will is not made, then under Hindu Succession Act, everything is equal, and each religion follows its own inheritance law. So will is very important because will make sure that the wealth goes the way you plan it. So typically, a will is made by you in your lifetime, and it would be important to put your wishes down. If a will is not made, then the estate is divided as per the Succession Act of your respective religion. And the requirement of a will is it should be in writing, it should be properly done with a good witness, with proper doctor observing you, so that you're held to be in a state of sound mind as you make a will. And clearly, it's very important that you do it. Each one should have a will. Each one should have a will. Now, one more thing which I came across, and Mukul, this even maybe relevant for somebody like you also. I had cases in COVID, people going to ventilators, and when they go to ventilators, they can't even sign documents to pay their medical costs. So in that kind of a situation, wherein when you are not capable to, you go into coma, you go into some sort of sedation which you can't even sign papers. How do you delegate authority for somebody to withdraw money from the bank also for your treatment? So people now do living wills also, like if you are certified by a doctor to be incapable to do something, then somebody who you trust is able to sign on your behalf for an entire period, so that your life goes on and you can meet your own expenses while you are in a medical state where you can't take your own decisions or sign anything. So living wills is also something which I come across. And the debates with
One quick question on this. A lot of people have asked me also. Does it make sense to register a will? What's your view on that? Because it has some implications for real estate as well. So any thoughts you can share?
It's not mandatory. So I would say depends upon the age which you are in. At the age of ours, Mukul, yours and mine, we don't need to register because we can keep changing our mind. Whereas if you are at 75, 80, well, you're very sure that now, yes, it's done, then registration of the will and having it code registered also helps you protect you and make sure that it can never be fabricated or with not to be right. So many people come to me, trust versus will. So clearly will you must do immediately. Will is operational after you die. Trust is operational in your lifetime. Suppose if you want to provide something to your grandchildren who are growing up, or for your children, then you can create a trust immediately and make them the beneficiary so that their education gets taken care of. In will, you have to wait till you die and it becomes operational only on death. In will, disposition of assets happen on death. In trust, it happens when you form the trust. So a lot of people hesitate to form a trust because they will transfer assets to the trust, or even if they form a trust, they part transfer their assets to a trust, not everything. Ownership of assets in a will remains with you till you die. In case of a trust, it goes to the trust as you create it. Execution of a will does not attract any stamp duty, whereas when you make a trust transfer assets, there's stamp duty payable. So if you're buying new property, you rather buy it in a trust than transfer a property to a trust, because that's additional stamp duty otherwise. You can modify the will as many times as you want. We can make a new will every 6 months, no problem. You don't like your son after 6 months, change it. You don't like your daughter-in-law, change it. In trust, once you create, there is very limited flexibility to change it. So you have to be very sure about your future when you make a trust. Estate duty planning is a very important thing. People don't, do wills and do a trust for estate duty purposes, because there's a rumor that if estate duty came in, trust will be outside the ambit of estate duties. And really, challenges are a will can be probated, can be challenged, whereas trust fund created cannot be challenged. So the thing which you said, registration, is a good step to make sure that the challenge is minimized, because once it's registered, it's far more robust from a challenge perspective. Questions in other people's mind, which doctors that I come across: should we shift to Singapore, Dubai, UK? Now Dubai has also introduced taxation. Singapore has a tax rate of 17, UK is 42. So clearly there are pros and cons, and depends upon if you're a doctor owning a hospital and you want to sell it, then migrating to overseas can reduce your tax burden. And some doctors come to me, I want to create international wealth, buy shares of international companies. That is permissible up to $250,000 per person per year. And you can do that. You can buy a house also overseas, but you can't buy a house with loans. You can buy a house from your ODI money, the LRS money is $250,000 per person per year. You can buy global shares subject to $250,000. All that comes in one limit, $250,000. Should I become an NRI subject to you, having your own thought process where you want to sell something, want to shift something overseas, you can look at becoming an NRI. But a lot of people came across these queries as to what should they do and what does it mean to them as they look at these kind of stuff. So what I experience with the doctors I advise, that they are busy, they're very, very busy in their profession and they're passionate about what they do. But how do they grow their wealth? How do they preserve their wealth? Can they trust advisors? Because do they get unbiased advice? How do they pass on their wealth to their generations? How do they optimize their taxes, 43 versus 34 versus 25? How do they keep a track of all assets? So many people I come across, oh, I have property here, property there, this record is not in my name, that record is not in my name, so on and so forth. How do I create assets outside India? How do I efficiently put some money to philanthropy? Some doctors want to sponsor some hospitals, some causes. How does all this put into play? So what I tell doctors is that it's good to do a proper family office planning, so that all these 9 box objectives are actually, some of them are conflicting too. How do you balance all this out, and so that you at least monitor your wealth and grow your wealth in a very defined manner? Like say, if I ask any doctor that what is your return expectation on your personal finances for next year, they will say we don't know. Whereas you should know. I mean, you want a 10% return, 20% return, because most of these answers will depend upon what is your risk appetite and where do you want to see your wealth to grow. So Mukul, this is a very important thing. How do you create a sustainable family office model for a doctor, whatever be the size of his wealth, so that he grows it as he builds his professional career? And in terms of wealth creation, what I see is that you start with liquid funds, short-term funds. So this part of it is conservative investment, where returns are low, risk are low. This part is where the balance of risk and returns happen. Equity funds, or HDFC, or different kind of ITC, Unilevers. And the more you go up, the risk becomes higher. Private equity, venture capital, land encroachment. So really, you need to sit through with your family and see where you want to play, where you feel the most equilibrium for yourself, I see people succeeding maximum in equities, and funds versus direct is a choice which you can make, because I know doctors who are smarter than anybody else, who know which pharma company does well, how will diagnostics do well. So your equities can be also understanding what is happening around you. Like, insurance is going up. So let's say HDFC Life becomes a very interesting play. Digital is happening, so that or digital play becomes very interesting. So really, you can leverage on yourself, but have this chart in front of you, see what you want to put where, and then grow your wealth in an organized manner. So my message to you is loud and clear. Don't take it for granted. Manage your family wealth, your family office, your personal wealth, your personal office as you are managing your possession. And make sure you do it on your own. There is no delegation out. With this, we will open up to questions. So we have 15 minutes. Yeah. And we can, Mukul, just take any questions which come, or
Sure.
anything else you want to do.
This is a very, very good base that you set, taking us through the budget and then towards the whole wealth management aspect, particularly given your experience on working with a lot of eminent doctors. That entire scale of what people can consider is very well defined. So let me first start by asking one question that's already come in from a doctor who's saying, look, I'm getting relatively senior still in terms of age, still have some dependent children, and I face the maximum possible tax rate. So, what should I be doing to address the kind of tax rate that I face and also help manage for my dependent children?
Two, three things. So first is the tax rate of 43 goes down to 35 if you form a partnership firm. The tax rate of 43 goes down even further if you give gifts to your children. So you give gifts to your children, and the gifts given are invested, and they have a base exemption limit, which is up to 10 lakhs rupees. There are slabs. So it's a very common practice to keep gifting to children so that you create your wealth. And in that gift which you give, the return on that wealth which you get also has exemption limits. So if you have a crore rupee on which you're earning 15 lakh as interest, the tax rate on you will be 43 on that 15 lakhs, whereas the tax rate effectively on your children will be 10 or 15%. So that's a typical way anybody who would have dependent small children would do it to reduce his taxes.
There's another question. Kind of you've covered that, but let me just see, there's a question asking that, for a general practitioner or a family physician, how can they gain from this budget? Is there any tax saving model which is available for common people?
For a general practitioner, there is nothing in the budget. So the only thing in the budget is that 28.5 becoming 23.92. On the contrary, there is a burden in the budget on how this thing of this expenses which are against the intent of the law play out. And if there's a 10% withholding on it, then there is a bigger problem. So I would say it is a little negative for the doctors. Other part of it is medical expenses and various kinds of deductions which are there for COVID. That doesn't impact the doctor, but it impacts the thing. I think digital learning, digital thing, the not in the budget, but which is coming out as a theme in the budget, like the world is getting digital, is an opportunity as well as a threat for the doctors. It's a threat if you are not changing. If it's an opportunity, if you just capture the whole Indian market with it.
Yeah, I think your point is very relevant on that front, that digital is both an opportunity and a potential threat. And people who make that shift are going to find themselves a lot more valuable, because your ability to reach out far, far wider is tremendous using the digital platform. There is, you'd mentioned this very interesting aspect, which has now come up around, for example, any healthcare company providing any kind of support for travel, for medical conferences, etc. What can a doctor be doing about an area like this? Or is it more something that the healthcare companies need to resolve for? Because there is one of the major thrusts for any doctor is continuing medical education. And within that, to be stepping out of the country or even travel to conferences within the country, it's a very expensive exercise. And if this starts getting reflected the perquisite value, that's a very substantial impact. So any thoughts on what can be done by the doctors proactively, or does it really sit with the healthcare companies?
It sits with the healthcare company to an extent, because they have to decide deductible, not deductible. But what will pain the doctor, what will be a bother to the doctor, will be the fact that how will the withholding work? If a 10% tax is withheld, that means he'll have to show it as income in his books. And if they show it as income in their books, then a genuine conference, which is a genuine educative conference, wherein he has gone to increase his knowledge, can become a perquisite for him. That's how this interplay on the withholding will happen, will be a very important watch point for the doctor.
Oh, that is a very substantial issue, which is now being developed. Well, there's an interesting question, and I don't know if you can help our participants here with some direction on it, which is that does being in medical background help in any way towards with respect to financial planning or investing? And maybe you can add also for the people here, any suggestion you may have on what they can read or learn from so that they are better prepared in terms of understanding and managing their wealth.
Answer is yes. Answer is yes, and I'll tell you why. Answer is yes, because if you look at any professional degree, teaches you an approach. So a professional degree tells you how to go about it in an organized manner. So I've come across doctors who are smarter than the financial planners in terms of money, because they understand the approach to it. They understand the methodology to follow to evaluate it. They may not evaluate it in a manner which a financial professional does, but their common sense approach is extremely good. Like, let's say when I deal with the IT problem, I'm not an IT professional, I'm not an engineer, but I can conclude, my conclusion is always right. My method may sound naive as I go about it. My question may sound basic, but because I'm a professional, my approach is always right. So I think if a doctor just spends that 1 or 2 hours on a Sunday, calmly thinking about his wealth, finding the common sense approach around him, there is lots in it for him.
And that's an interesting point. And one of the efforts always from our side is to assist the doctor in any of their professional requirements. And so while there's that effort goes on, simultaneously the intent is in doing such exercises, such as the one that you've taken up, Girish, which is to help doctors understand what the budget overall means, what it means specifically for doctors, and then of course what they should be thinking from a wealth perspective. I think we're getting in there in terms of time, but I have space for probably 1 or 2 questions. One question that I'd like to understand, Girish, on behalf of all our participants, is that creating of a firm or or even a trust could be quite expensive as well. So can you give a perspective on what would it cost to set up something like this and the continuing costs? And in what context would it make sense? Because each doctor is frankly like even at a clinic level, they are running the equivalent of a SME, right? They are a medium scale enterprise where they're managing everything on their own. And the moment you become a little larger, the complexity goes up. So what would you suggest for how the doctors should look at this, and at what scale should they look at going towards a firm structure or a trust kind of structure?
I would say doctors within an income frame of 2 to 3 crores, up to that, should not worry. They should just pay their taxes and get going. And they should use the gift mechanism of gifting to their children and making sure that they create parallel files for their kids. But a doctor which is around 4 to 5 crores need to think through all this. of income per year. I would link it to income, not to wealth.
I think that's a very useful reference point with which our participants can definitely work. I'm just trying to see if there's any other question which is coming up that I'd like to run past. I think we've covered the set of questions which have been received. Girish, thanks very much. This has been a very interesting discussion, and particularly the aspect around managing of wealth. I'm really thankful on behalf of all the participants here that you've given us the time that on a Sunday to talk through this. If there's anything else you'd like to share with us or share with doctors, we'd love to hear it. Otherwise, I'll pass it back to Preeti.
Not at all. Mukul, thanks a ton. Wish you all the very best.
Thank you so much. Preeti, over to you.
Sir, I'm Nishita, and thank you so much, sir. Now, I would like to say some words regarding this. I'm really thankful to all the participants, and especially Mr. Girish Vanvari, the guest of honor, and Mr. Mukul Nag, and those all who joined this event. As we bring an end to this event, and I hope that this event turns out to be a beneficial to our doctors in the long run, I would request everyone to visit our website, that is www.clirnet.com, or download the Clirnet app from the Play Store or iStore to watch the previous sessions. Thank you and good afternoon to all.
Thank you very much, Nishita. Thank you, Girish.